our today's trading idea, we have three. Let's start with the first one. Will be Bonia. Bonia will be one of our screening using fund style of value, whereas we think there's given the reaction for the past few days, value could give you some sort of the at least a comfort in terms of how the stock has been valued from the quant perspective. The scoring for the quant Bonia is also quite decent at 8.2, so we think there's decent chance for the stock to continue to outperform at least in the term. Now, building on that, you can take a look how the stock is actually taking out the major resistance, which is sit within at 180 cents. So this level have been tested at least a number of times for the past few months, I think since September, and this serve as the major resistance for stock. So as the stock create a new higher high structure breaking out above this level, it actually has changed the so-called resistance now into a key support level. So for the past few days, you also seen how the stock is actually completing its commonly known as the commonly known as return move. So return move, the stock is actually bouncing off again within 20-day moving average, and the critical resistance current support does give you indication that the uptrend is ready to resume. Trading volume is improving, but there's no spike in terms of the RSI and MACD yet, but I think in terms of transaction, it does look quite promising. Risk to reward ratio also quite attractive, with the cut loss is actually pegged at 173 cents, and the upper resistance is actually between 195 cents and 212 cents. So that means risk to reward ratio, you are risking about 4.9% with a potential upside of 16.5%. All right. Second stock for today will be a soft research. The one reason why we highlighting the stock, because we like how the stock is actually start to moving upward in terms of the how the overall trend will be. So on the screen here, I think it take time to load. There you go. Right. The stock is actually testing the red line here, represented by 200-day moving average that has been testing a number of times, and it failed to surge past the level, I think, since back in August 2022. You see another breakout move on April last year, but it's never been what I would call a solid kind of breakout until recently. I think until on the 1st April, we are seeing a much more stronger base has been formed above the 200-day moving average. So that gives you stronger indication that the overall trend is about to shift upward. So for the past few months, I think for the past 2 years, the stock has been building quite a massive so-called support or baseline right within 50 cent region, and I think in terms of the overall trend structure, this could be a start of the new upcycle. I think in the momentum also gearing up much more stronger, more trading volume also improving, MACD also improving. So because of that, in terms of risk to reward ratio within the current level, quite attractive for accumulation. Risk will be at 51.5 cents. It is about 7% downside risk, with the potential upside set at 60 cents and 69 cents, represent about 24% upside potential. So risk ratio about 1 to 3.37. So it's quite attractive as we see at the current level. All right. Last but not least will be Systech. Systech is the stock, whereas we think there's decent chance for the, continue the current upcycle following the stock has been establishing a new baseline or support level within two critical support. One, the 200-day moving average, another will be 61.8 Fibonacci level, and those levels have been tested a number of times since November. So you are seeing also some sort of the compression kind of like seeing what we call a triangle pattern, and the breakout of yesterday move. Okay, RSI breakout, the momentum breakout above the triangle pattern gives you strong indication that this is the new upcycle just began. So trading volume also high as per yesterday. MACD also turned much more positive. So we expect this could be a start of the new upcycle, with the next technical resistance is actually paid at 49.5 cents and 56 cents, while the cut loss level will be below 40 cents and a half. That means risk to reward ratio is quite attractive at 2.44, 10% downside risk with 24% upside potential.